Okay.
Okay. Welcome, everyone. Thank you all for joining us this morning, this afternoon, this evening, wherever you are. And we want to say thank you again to the Exacto Labs team for joining us this month and agreeing to be a part of our Lunch and Learn. And so right now I will turn it over to Orang, who can introduce himself and tell us a little bit more about Exacto Labs and the team.
Thank you. Thank you, Tiffany. Great. Thank you for giving us the opportunity to introduce ourselves. My name is Orang Diolame. I'm the CEO and co-founder of Exto Labs. I'll briefly introduce our team as well. James Daly is one of our co-founders and heads our product team. Tim Dorsey is our CTO, and he's been the architect of the system we'll present to you. Godfrey is heading our team in the southern part of Africa, in the SADC region. And we are a 5-year-old fintech company based in Los Angeles. I'm going to start sharing some slides here to introduce you both to the company and to our solutions. And feel free to interrupt me anytime during the presentation. We can make this interactive if you have any questions. So Exto Labs has developed this platform we call ExtoPay, and our objective was to really address financial inclusion and overcoming sort of the gaps that we saw in markets where connectivity was an issue, access to mobile devices was an issue, and the unbanked populations. This was one of our primary objectives. So the tagline, the last mile solution for digitizing cash. And as you'll see, we have a variety of wallets that facilitate this type of financial inclusion. And our system is based on a permissioned distributed ledger. We actually took over and modified our own branch of the XRP ledger. And as you'll see, we've tied this system to be able to source funding from banks, from stablecoin networks, or from CBDC issuance systems. The overview of the company, just very briefly before we get into the technology. We started here in 2020 in the US. We do have a strong presence in India. As you'll see, we were engaged with the central bank there. So we have a subsidiary in India that's very active. We've also established a joint venture in the Southern African Development Community region, and we're going to market also in Central America. And the key, again, capability we were after was to be able to do digital payments off grid. In trying to be like cash, the objective was users should not need connectivity. And this was to secure such a system where you don't have double spending attacks was, sort of a novel capability, and we have addressed that. Later on, the CBDC initiatives stepped in, and in fact, Bank of International Settlements and many others began defining this. So, but we have taken that concept and extended it to e-money and stable coins as well. And one of our other objectives was really to develop a system that could make transactions be negligible, because adoption by the informal sector requires, sort of the transaction fees to go away effectively. If you look at universal payment interface in India or other markets where widespread adoption has happened faster, that's one of the key elements. And the other aspect we were trying to address was to make sure that the data in this system was private, and it would be anonymized for counterparties, third parties, but at the same time to allow essentially regulated entities to achieve their compliance. So our approach is B to C. We enable regulated financial institutions. We'll talk about where we have sort of a strong uptake. We, again, as I mentioned, we wanted this to be enabling inclusion, but also we wanted the system to be fully operated and governed in jurisdictions that we provide this for. And as you'll see, our initial objectives are B2B cross-border and retail remittance termination, government-to-person payments, other services that can be built in these scenarios. The system has gotten quite a bit of recognition. We have been part of many CBDC competitions and e-money competitions. These included Global CBDC Challenge by the Monetary Authority of Singapore, the G20 effort led by BIS and the Bank Indonesia. Ripple recognized us having used some of their technology to develop this capability. And then most importantly, we ended up getting selected in several initiatives by the central bank in India, Reserve Bank of India. And these included both e-money to extend universal payment interface with our offline and non-mobile capabilities and bring scalability that they need, address their, both handle CBDCs and e-money and this anonymity problem, because UPI does have some data challenges. And we finally went through a regulatory validation project to sort of show the security of this offline capability. That was one of the key issues, that we needed a regulator that had the ability to assess and essentially approve us, so that regulated financial institutions would feel comfortable using the solution. And we worked very closely with National Payments Corporation of India, as well as Common Services Corporation in our trials as well. So the sort of key aspects of the system that we're going to introduce to you right now are the fact that, number one, we wanted to enable this off-grid payment with no or intermittent connectivity. We wanted this offline value to be both secure against double spending, but also recoverable, so that if you had loaded these wallets and then spent some of it off-grid, to actually be able to recover that remaining value in case the wallet was lost. We're bringing in the key aspect of using block DLT technologies is to use the programmability. And this is for directed use of funds like vouchers or compliance. In B2B cross-border payments, it's a very heavily regulated sector, food safety, FDA approval for pharmaceuticals. In the agricultural sector, there's a variety of requirements. And again, this programmability can address the traceability and compliance issues. And it cost being, getting rid of cost effectively for transaction fees and moving the monetization to other aspects we can talk about. And universal access and open architecture. We want this to be a open payment network in jurisdiction government, and really making even the supply chain and operation of this technology, available to operators in these regions. So, just to orient us before you see our solution, we see that cross-border payments, really both for business to business and peer-to-peer, there's a lot of friction in these, and they're slow, costly, heavily regulated. And whether it's e-money, and now there's an opportunity that's been sort of emerging with stable coins in other areas, central bank digital currencies are being considered. There needs to be solutions that can on-ramp and off-ramp to these type of rails, and to be able to create interoperability between these types of currencies. So one of the other aspects we wanted to address was this type of interoperability. And when you look at the transaction volumes, obviously B2B cross-border is very significant, and sort of peer-to-peer, is an area that we think we can also address a lot of problems. Many of the remittance receivers are in rural areas and have a lot of friction to access the areas where they can cash out or have access to connectivity or digital instruments. So for peer-to-peer, we try to address the high transaction costs. We try to address where they are, and be able to bring the cash out locations to them through agency models where we can use small merchants and others to be able to act as very secure cash out locations. And for B2B, we try to address high costs, long settlement times, a lot of the compliance issues related to tariffs, customs complexity, and also improve the security of this that you'll see. These were the main objectives. That automation, that programmability can bring in is a huge potential cost savings in these complex flows where you have various certifications, various attestations by inspectors, and with blockchain systems, all of this can happen on-chain, be fully transparent and auditable, and automate essentially the transaction through smart contracts. And that's sort of one of the promises of digital currency models that we're trying to address in terms of making them better than e-money. James, do you want to address a little bit about what our solution attributes are before we get?
Yeah, I think it's important to sort of dwell a bit more on the problem set of people in rural areas that are not always online or that have high latency, and having some ability to do off-grid, completely disconnected transactions while preventing that double spend was sort of one of the areas that is applicable for that scenario, but also for disaster scenarios. The security of this is also where we spend a lot of time. You'll see that in the design of the technology, and then we've mentioned recoverable. When you have cash, right? This is more like cash, but it is recoverable, so that enhances its value as well. The anonymity is more about the ability for users to manage where their data goes, and who they approve sharing that data with. And then interoperability is, when we look at the different payment systems out there, interoperability is a key gap between sort of the new set of stablecoins or CBDCs or existing fiat currencies. And so being able to provide a interoperability at the point of use is our key value proposition there. And then Orang's already mentioned programmability. So it's secure, it's offline, and it follows transaction protocols that we'll get into a little bit later.
Thank you. So now getting into what the system is like, we basically have a wide range of wallets, and these include mobile wallets where we enable off-grid value. So what you see in this, there's a black sort of square that shows offline value that's available to the user. When they're online, we top off this offline capability automatically based on limits that the user sets or regulations require. And then when they're offline, we use a multi-layered approach to protect this. We'll get into the security architecture, but essentially it enables users to be able to transact with just Bluetooth and QR codes of their mobile devices or NFC. So they can essentially do peer-to-peer payments or person-to-merchant payments. If one party is online, our protocol support using that to settle things right away. If they're not offline, we essentially allow a programmable amount of time for them to remain offline. This is part of the security architectures that BIS also recognized. There's essentially one of the ways to protect this after you take all the precautions of securing using, trusted execution environments, or in our cards, let's say, secure elements. You still have vulnerabilities for this offline value if it's pervasive, being used everywhere. So the ultimate way to protect it is to make this an intermittently offline solution, so that you basically within a week, within 2 weeks, it's a programmable amount by the financial institution operating it, that then requires users to go back and settle these amounts. And then if we detect any compromised wallets, we can disable them and propagate this information in the form of a block list to others. We'll describe that more, but this offline capability is available in mobile devices. We then wanted to still go beyond mobile users. So what we have enabled are very low cost, battery operated point of sale solutions that you see in the form of this biometric smart card, where there is an ability to enter pins and biometrics, or a slightly different packaged version of this in the form of a sort of a point of sale device with connectivity. And either in combination with a mobile device or standalone, this version that you see below has actually connectivity with LTE or mobile connectivity or Wi-Fi. Allows basically the merchants to accept payments, but the consumers then can just have a QR card and then use their biometrics and a PIN to access their account. So in India, for example, this is analogous to the Aadhaar-enabled payment system, where for financial inclusion, India has onboarded pretty much the whole population with their biometrics. And what we try to do here is develop a system that would allow jurisdictions that haven't done that yet to be able to onboard consumers ad hoc through these types of merchants and agents by checking a ground truth photo ID or other forms of KYC we'll talk to you about. And then from that point on, the consumers could effectively access their accounts just with biometrics. So that's kind of the widest way to reach, users that don't have instruments and wallets and access to devices. But then we enable, they could have mobile devices, they could have, the full-featured card to be able to do peer-to-peer payments themselves, or just a standard NFC card. And each one of these has different attributes in terms of, how it performs. These biometrics, yeah.
Sorry, I thought you were done here.
Sure, please go ahead.
You mentioned earlier on this slide the BIS, so just to make sure people know that that's the Bank for International Settlements, which is the central bank of central banks, for completeness here.
Correct.
Sorry, you were about to talk about the QR code there, but I think it's important to emphasize that the BIS has been, studying this area, writing things about replacing cash or coming up with systems that could replace cash. And we've been definitely following or even anticipating some of their moves. So wanted to mention that here.
Yeah, I think we were the earliest company that established this. Tim, who's on the call, was the architect who came up with this form of securing it. We have semiconductor expertise, and we knew that trying to do an offline payment just with secure element defenses, or then even the lax security that a mobile device could offer with trusted execution environments, was not adequate. If you have a lot of value sitting in sort of an offline system, it becomes a very strong attack vector. And that's where we came up with this intermittent approach. And then BIS has defined these three categories: fully offline, which we still believe can have catastrophic failures. If someone hacks one of those cards, they can produce, 100,000 of them, sort of a counterfeit card attack. If there was, let's say, $10 of value on it, this becomes a card that you could produce, lots of them with $10 of value and let people go take advantage of offline, merchants or users. So this intermittent capability we'll describe is really fundamental to make it uneconomical for these kind of attacks. And again, what we also wanted to do was to bring the cost of these point of sale devices or instruments down so that, instead of a Visa MasterCard type cost or even a cost of a smartphone that's pretty low, we're trying to get down to $10 of cost for these type of secure devices on the merchant side, $10, $15. And what's involved in these cards is we have, as you'll see, you might have seen in the videos we shared, e-ink display. This secure display is really key to make sure you can't, who you're paying and how much you're paying. A biometric sensor. We have obviously secure elements on these cards. There's a capacitive touch version or a keypad for if we require entry of pins for two-factor. And there's Bluetooth, NFC. We can also include standard EMV NFC type functionality on these cards, although that's, let's say in India, we integrated with RuPay for these payments. So we'll talk more about these wallets. I think the topology of the system, what we've done is we've essentially developed a permissioned distributed ledger that is allocated for a particular, we refer to it as a bank here, but it can be a fintech, it can be a remittance company, it can be a stablecoin, issuer, but a regulated entity that's onboarding consumers and merchants. We allocate a set of nodes for them to have a permissioned distributed ledger. We then we allow essentially full KYC and AML functionality in the system. We'll get into it. But then we allow that system to be tied to banking APIs or fast payment interfaces like UPI or TIPS or PayShap in South Africa, SPI in Mexico. And we can then bring in value into the system from those accounts for banked users. When we bring in value, we escrow that in a secure account, and then we mint tokens on our system on the distributed ledger, and we then keep track of the transactions between parties. And when value is taken out, we then burn those tokens. We can do the same for CBDC sources of funds and stable coins. With these systems, the programmability and the security architecture really, is very strong because they're designed to be cryptographically secure to tie into another distributed ledger system like ours, and that with smart contract layers, we can essentially automate a lot of transactions. To address scalability of the distributed ledgers, we came up with essentially a two-tiered sort of architecture where we have sort of an interledger layer where we allow this both enables open loop, so if a bank A user paid a bank B user, we can settle through this interledger layer, or we can settle through the existing systems that are out there, like fast payment systems that do allow this type of settlement. So we initially, frankly, embraced the existing settlement systems, RTGS systems or fast payment systems. And then if there is any lack of capability there, we have ability to deliver that on our own. And we also use this hierarchical layer to get horizontal scalability. If we have very high volume corridors, we basically can horizontally scale the system and use this for that purpose. For unbanked users, we have very strong agent capabilities, which allows untrusted agents in the form of small merchants or money, the equivalent of money agents in emerging markets, to onboard users through photo ID or lighter KYC or KYB type scenarios. They can onboard, sort of agents can onboard merchants, merchants can onboard consumers. And once they're onboarded, we basically automate the KYC because we link the onboarding to their biometrics. And we essentially, every time they're using their biometrics, we know that this was the user that had been onboarded. These agents then are banked with our system and can act as cash in, cash out agents for unbanked users. And the system also allows onboarding with attestations. So in regions where you don't have, populations may not have digital IDs, the regulators allow, for example, clergy or physicians or educators to act as attesters for that particular user. So we allow those types of onboarding as well. And again, the system can support e-money through the APIs that I mentioned. In regions that CBDCs are being considered seriously, we can allow onboarding, value and with CBDCs, and more importantly, allow interoperability between these two. We can convert CBDCs to e-money and vice versa, or we can convert stable coins to e-money and vice versa. Just to show you a little bit of the offline capabilities. Offline and online are not separate for us. We basically treat every transaction the same way. If there is connectivity, we use online settlement. If there isn't, we use our offline protocol. But just wanted to sort of stress that we can allow these off-grid transactions between mobile devices. We can allow it if the merchants have our very low cost setups, not just this mobile device and the card. It can be that POS device that has connectivity in it as well. We allow access with biometrics and PIN. We've gone a little bit, we saw some of the problems that there might be with single factor authentication of biometrics. Those are being attacked. So we do allow both PIN and biometric access. And if in this scenario, the merchants have to be online because we have to pull the biometrics off of the cloud, but we do allow restricted offline modes where, for example, in India or in certain regions, banking agents or financial agents go out to villages and they have a preset customer list. Our system allows all of the credentials and ledgers to be localized on the agent's device and for them to go off-grid, do the transactions with just biometrics with these users, and then come back and sync with the network. When we have a passive card, NFC card, we can do this basically in a semi-open loop fashion. The agents don't have to be restricted to a subset of users to localize their credentials. That user can interact with multiple agents or merchants. In a B2B scenario, our cards perform a whole other function. This is now where you have large volume transactions, and we effectively act as a co-signing device to mobile wallets of business-to-business users to really guarantee that the authorized users are there. We use multi-signatures between the cards and the mobile devices. We enable multiple permissions, within an organization. If you need multiple approvals for a transaction, we allow that. And more importantly, we allow attestations by inspectors. So these cards can be used in an offline setting. For example, you're shipping avocados. There's $3 billion of avocados that come to the US from Mexico, for example. And these need to be certified the farms need to be certified, food and safety inspectors need to approve things, customs and border personnel need to approve things before, just a few examples of a few touch points where you need to, there can be incredible efficiencies in programmatically automating these capabilities. And yeah, so these are higher end applications for our solutions. I think that one of the key things that I want to mention, for example, in the case of, let's say, remittance cash out, let's say looking at Mexico, we have about 60 billion of remittance that goes from the US to Mexico. That overall retail remittance market is around 900 billion a year. But most of this retail remittance from foreign workers that are being sent back, the recipients, let's say in Mexico, roughly around 45% of them are in rural settings. High percentage of them are unbanked, and they have to travel half a day to get to a suburban location, to an OXXO store or another cash out location like Western Union or Ria Money. And there's a lot of security issues, lost, paid during that period, and still very high costs in these systems. What we enable is essentially local merchants, tienda stores, right in their area that they live, to act as cash out agents, so that when they register with these users, they and onboard them, we basically allow cash out in a much closer location, for example. They also have the option to keep their value on these wallets and continue to use it, but we feel there is a transition that will happen from cash out to people going and keeping value on these types of wallets. But this scenario, for example, means the user has nothing other than a passive QR card, and they're using their biometrics and PIN to access their account, and we fully secure it. We also are doing an automatic KYC, which in the case of, because of their biometrics being used here, in the case of remittances, this is a regulatory requirement to know who's getting paid. And this also works for government to person payments. So, when you're in many countries, there are social disbursements. A large number of these users, again, are in rural areas. Same problem as remittance cash out, that termination phase applies. And we enable that. And again, our system could do this with e-money, or it could do it with stablecoins, which now bring a whole new level of efficiency. These rural networks are extremely important, these merchant agent setups, and they can lead to helping microfinance disbursement and collections. They can enable utility payments in these regions. So that's the grouping that we're trying to address. Just in India, what was very key for us is to show that this offline value was secure, because we had a lot of interest from many commercial banks and other central banks, but really no one had done pervasively offline solutions. When you look at systems like Visa, MasterCard, or mobile wallets that do allow some offline transactions, these are really edge cases where power at a gas station has gone down, and you can do a number of payments to that point of sale device. When power comes back up, it settles it. But they were not really designed for pervasive value to be out there and offline, which would make it a much more persistent target for attacks. And so what we did, with RBI was they had this requirement. They had actually a competition. 300 companies participated. They selected us. We went through a very thorough validation of the system, and this was with 2,000 consumers, about 140 agents, 30 merchants. SHG leaders are self-help group leaders. These are the agents that go out to villages to cater to financial needs of villages there. And we tested essentially both. These tests were done in tier 2, tier 3 villages. You see the photos. We trained these agents. They essentially showed that the users would be able to use these. There was about 14,000 transactions per month. we didn't have a single failure on our offline transaction modes. That's one of the things about offline. You don't run into the same failure modes that online systems have, where when connectivity drops out, you essentially transactions can go incomplete or system times out, and you get into disputes and reconciliation challenges. Given that we allow, let's say in this setting, we had 2 weeks before people would have to get back to the network to settle their transactions. And that offline capability creates resilience in terms of succeeding to complete the transactions. And so we tested this for online, offline, peer-to-peer, person-to-merchant type scenarios, and the system was validated, and we finally got approval actually early this year. So in February, we were given the green light to work with regulated institutions. We're now very actively engaged with a number of other jurisdictions. Where Mexico is one that we're approaching. South Africa is another area. Botswana and other SADC regions are areas that we're targeting. And again, our focus right now with this system is remittance, cash out, government to person payments, B2B type transactions that reach into these agricultural areas. So a lot of that B2B transactions, let's say in the US, we have around 200 billion of agricultural goods that come from Mexico, Central America, South America, and Canada. And these are a lot of the sort of certifications, attestations start upstream in these rural settings. So it's not just the retail remittance recipient we're after in those markets for the peer-to-peer remittances. We're after the agricultural sector to be able to enable automate transactions for them, enable lending for farm input. So a lot of what we do in this rural area is both the B2B and peer-to-peer, and government to person payments and utility payments. So this is and our go-to-market, we do partner with a lot of the FMCG sort of packaged good products manufacturers, because they reach these rural merchants. They're delivering goods to them, and we've successfully done this in India with our team there. We've partnered with the likes of Nestle and dairy brands and others who also have a motive to digitize transactions for their own benefits in terms of how these merchants pay their distributors, and as well as they want to do inventory financing and things of that nature. So we're trying to create a ecosystem around this solution. I will get into describing what's under the hood a bit, and I know you're a technical team, so if you have any questions here, please stop us. But essentially, our system has these wallets that I've mentioned. These are like crypto wallets, and in the sense that we generate a private key on them, and then we sign transactions publicly. As I've mentioned to you, we bring in the value and we store it and escrow it, and we mint essentially our token based on that value, and we burn it when the value leaves the system. But the wallets themselves, operate as digital currency wallets, where we've generated a random key. We then keep that; it never leaves the wallet, whether it's mobile or whether it's a card or whether it's an online wallet. It's your biometrics gives access to that key, but it never leaves our security architectures in the cloud. It just signs transactions for you, and that type of wallet gives you a lot of security for account takeovers, but it produces the challenge of what if the wallet is lost. So the recovery will become an issue, which we'll talk about. But so we have done all of these wallets. We heavily modified the XRP ledger, because to do offline transactions, you had to have out of order sort of transactions that come in. We had to link the identities of the users and establish this time limited expiry, where the value you have offline, you have to get back to the network to sync it. Otherwise, it freezes. That value would not be available to you. And we've also are adding a smart contract layer on top of this to enable the automation that we're talking about. But the system is very heavy on supporting KYC and KYB. We effectively need that because our recovery process relies on a re-KYC to give you access to the account. That's one of the ways we have addressed the recovery. So for us, KYC is not just a regulatory need, it's inherent because we didn't want, like crypto wallets, for users to have to manage backup keys or passphrases. We create a recovery key during the onboarding. We store that and we link it to the user's KYC. So if they lose their wallets, they have to come back and get re-KYC. But this digital identity that's kind of built into our system also addresses the automation of the KYC function, where after the first time onboarding, people can be automatically validated by the use of biometrics. We handle all the account creation, and then we tie to the banking systems. Here is where we work with Baseflow. James is, as one of our co-founders, he's also the co-founder of Baseflow, which is a FINERAC-based system that you're familiar with. And that's where we established the Nostro account and reserve account capabilities. And we use the ISO 20022 interfaces or direct integrations with systems, fast payment systems like UPI, SPI, PayShap, Tips, etc. And we then, our wallets can also interface with, public, networks for access to stable coins. So Ethereum, we support ERC20 tokens, so USDT, USDC, or other networks can be supported, Solana, Polygon, alike. And then again, for CBDCs, it's really case by case in the jurisdiction that has such a system. We haven't done any integrations with CBDC systems yet. So that's the sort of backend stack of the system. This is all Amazon cloud-based, and it's a very nimble system in terms of cost of operating it, and very scalable. To talk a little bit about our off-grid transaction protocol, because this is really at the heart of securing the offline value. So we do use essentially we generate, we have to have these private keys on these wallets that are signing public transactions aimed at the recipient's account. But if these keys are extracted, that offline value can be replicated and counterfeited. So we do use a multi-tiered architecture, secure elements, trust zones, a variety of hardware protection methods on these types of secure enclaves, or we use trusted execution environments that mobile devices enable and protect this access to this private key to the extent possible. Mobile is a bit more vulnerable because at some point you have to bring out the private key to use it in open memory. You don't always have access to the mobile manufacturers are opening up with their secure elements like iPhone. With what happened to them in Europe, it's still very challenging to get access to it, but you still can't run what you need to run on those secure elements. So at some point the data has to come into open memory, so mobile devices become a bit more vulnerable in our opinion. But for sure, and that's where we come in with time limited balances. So when our mobile devices or card wallets sign a transaction, we can transmit this transaction over Bluetooth. We obviously encrypt it for privacy reasons, but even if someone saw that transaction, they can't really do anything with it because it's aimed at the only the private key holder of the recipients can unlock that value. But for privacy reasons, we still anonymize this, so counterparties can track you. But we then either one, the payer or payee, when they go online, they can post these transactions. And we put a time limit on this. So we a programmable time limit. So when you load value in your offline wallets, for example, it could have a week of before it expires. And anyone who gets paid by it has the remaining time that's there to get back to a network and get connectivity and settle this amount. So we've created enough security where counterparties can consider their transactions final, and we basically managed to convince a central bank that the risk is the security is there for the payment service provider to and regulated entities to then wait for the settlement later. So that time limited authorization, the fact that everyone then has to come back to the network to unlock their values and settle them, and it could be either party. So we can get the transaction from the payer or from the payee next time they're online. It happens kind of automatically when you're online. We sync with the backend network. That's where we would identify an attacked wallet that's been compromised, and then we create a block list and propagate that to everyone else who's coming back to the network. And this basically makes it uneconomical to try to do these type of counterfeit attacks. By the time you spend all the resources to create these fake devices and wallets, the value has basically been lost, and you can't extract much value. We do allow some, the system can support both a situation where when someone who's offline gets paid for highest security, they would not be able to spend that money until they go back online and clear it. Or we can allow a limited number of respends between these wallets before you're forced to go back online. There is eventually a memory limit of how many transactions we can store on these devices. And also from a security perspective, that would open up some additional attack vectors. And then finally, how we do the recovery and onboarding. So we support a variety of KYC and KYB scenarios. We can essentially have the agents scan your photo IDs. You can watch videos of our system doing that in the materials we've shared. And then, or we can use existing ground truth like Aadhaar or passports or other, or just light KYC with one-time passwords to phones if your phone is an indicator of your identity. And we allow you to then be onboarded by an agent and then this information is sent back to the regulated financial institution who validates it and can approve or unapprove your onboarding. But we then also link you to the biometrics and PIN that you're selecting when you're being onboarded, so that from that point on, that biometric and or private keys that you might have on your wallets becomes an identifier that's linked to your identity. So it's in a way automating KYC. Then it's not like a credit card or a mobile wallet that you could, if you gave the credentials to someone else, they could use it. Here with the biometrics, it requires you to be present, and we're using that as a means of indicating that KYC is happening automatically. During this process, we have an end-to-end encrypted connection to the agents. And that's where the wallets of the users can generate, if they're self-onboarding or through agents, can generate essentially a recovery key. This recovery key is then stored in a hardware security module on our back end. And if you lose your device and wallet, you're forced to go back for another verification of your ID. And then with a time limit, because if there's still, we can recover your online value immediately, but the offline value has a delay related to that time limited authorization and then you end up getting your value back using this recovery key. We generate a new wallet for you. So I think I'll stop at this point. We do have some videos to share, but I know it was a fire hose. I'll open it up if you have any questions. Happy to answer them.
Okay, right now we have two questions. And the first question, and feel free also to come offline if you wanted to ask your question, or I'll just go ahead and read it. So the first question is, what were the technical motivations for forking the XRP ledger as opposed to using a different platform?
Yeah, so we wanted, essentially a system that was scalable and was fast. And there were other choices, but it was one where we could essentially get essentially the speed that we needed, with a few seconds settlement time, and it had some of the other features we cared about, in terms of scalability. I should mention we're developing our own distributed ledger implementation. We call it Hypershard. So we're agnostic at the moment. We're using XRP, and it's addressing all the needs we have. But we're trying to get rid of that 3-second latency, and also the offline capabilities showed us that there are some much more efficient ways to get to scalability and fast speeds. So we're actively developing some alternatives as well.
Yeah,
I think Tim came off
Go
mute.
ahead.
There you go.
Go ahead, Tim. Yeah, go ahead, Tim, if you want to answer.
Is to handle the out of order transactions, which is necessary for the offline case. The recipients may submit these at any time, which may be different than the order that the payer created them. And any of the UTXO based DLTs, it's very difficult to enable that out of order capability. Whereas with an account based system, which XRP would be one, Ethereum also, there's others that are account based, but those are easier to adapt to allow the out of order transactions.
Okay. And I have another question, and let's see. On the time limited balances, you mentioned that these are configurable. So they're wondering what the default or recommended limits are, and how do you recommend that a merchant or agent think about setting limits for their environment? So what considerations are important for adopters to look at?
Yeah, I think I'll let Tim also talk about this, but we set them right now for 2 weeks, I believe, Tim, in our tests in India, correct?
Yeah, that's right. I mean, the main drawback to setting it longer is that's how long the user has to wait if they lose their key. And let's say we had a month of usage time and I lose my wallet, then all of that money is locked up for a month. So that's the pressure to make them shorter. Just the general system, let's say we believe our hardware is secure, but if there was a compromise, somebody figured out a way to crack these wallets and get keys, then the shorter that window is, that's essentially the fraud window, that if somebody cracked the key, they have 2 weeks to go and find people to pay. And so it depends on the security properties. So it's a system parameter rather than a transaction by transaction. So the recipient really has to decide, so they can set a limit. Let's say they know they can't get to the bank for 3 days, then they could say, I'm not going to accept this payment because it expires tomorrow. But that expiration is set at the time that the device was last online. That's when it picks up a new expiration date, and anyone it transacts with has to, contend with that and decide. And then let me mention also, if it expires, we generally still allow it to be paid as long as the account is still in good standing. So,
right. So exactly. And what I wanted to say is, just to add to Tim's, that ultimately this is something that the payment service provider can take the risk. So if the balances and the limits on these wallets are low, that there could be a payment service provider that says we're going to really extend this, time and let people be offline for a lot of time, and we'll take the risk because we trust the security of the system. If the balances are high, let's say for B2B transactions or something of that nature, then you might want to short it. So Tim is describing the system capabilities. There's also policy and risk tolerance by the operators that can guide, so there's a lot of flexibilities, what I'm trying to say, in how you set these.
Okay. And so we have 3 questions in the chat, but I know we are running close to time. So Roberto, if you wanted to let us know like which 1 or 2 questions would be priority, and maybe we can also just get the answers to the rest of them to share offline.
Yeah. So let me kind of try to quickly, maybe I can try to telegraphically answer some of these, but in terms of reconciling the offline accounting and online accounting, we basically have essentially a Nostro ledger where all of our, we have the ledgers on the distributed ledgers, and then we have the Nostro ledgers, and they generate transaction reports, and these were essentially shared in our tests in India. The reconciliation was handled and tracked that way for compliance purposes. I don't know if that addresses it. Let me see. How do you account offline payments discrepancies in the online ledger with respect to errors or fraud? Yeah, so number one, what I want to mention is our offline transactions in the 14,000 transactions per month that we did for 6 months with these users, we didn't have a single failure. So this system is extremely resilient to failures that you would normally see with online systems, and you would normally see with wallets where their username, password. 85% of account takeovers happen because of lost credentials that way. Or if you have card payments, if someone gets your card credentials and address and CVVs, they can do online fraud, so on and so forth. It's not possible with this system, given that possession of that private key and the multi-factor. So number one, we don't have, the same fraud and or dispute failures, but the system keeps track of all of this, and it creates transaction by transaction reporting. We did have failures with our online portions in India for different reasons by the operator, and those were all kept track of, and we reconciled them, through manual settlement processes. Okay, I think we've gone over time, so I don't know if there's anything else we need to address, but we're happy to take these questions and answer by email.
Yes.
Or we can continue. Yeah.
We can do a couple more questions. I know Pedro has some, and I'll be sure to gather all of these questions and send them to you so that we can make sure that we get all of them answered as well. And let's see. Pedro says, assuming you are loading the offline wallets with tokenized money, how are you reconciling data if payer and payee devices come up online with different views of the same transaction?
We spent a lot of time thinking about this and talking through this. Maybe Tim wants to take the.
Yeah, Tim.
Yeah. There's a 2-stage. So we do these transactions peer-to-peer over Bluetooth. And of course, the problem would be if that Bluetooth connection breaks, that's the only way the payer and payee could end up with different ideas. And so that's a very, rare event within a certain split second, like one packet has to go and then another packet has to drop. So it's very rare, but in that case, there's a revocable capability that it's a 1 day, the payer can go pull money back if the payee refused to admit they received it. So it's definitely it's a tricky problem, but it's much easier in that closed peer-to-peer setting versus when you're trying to settle also with the back-end system, that connection could drop much more likely. And as far as the chaining, we don't have to do any chaining as long as you're not trying to respend money you received. So let's say if I get a $50 deposit, I can go make 10 $5 payments out of that in any order, and that'll be resolved on the back end when those arrive. So it's only if you want to if your balance is empty, you can't spend any money except what you've received offline. That's when we have to do chaining. And that's where the memory limitation Orang mentioned, that you essentially have to deliver your inbound transactions to the new recipient, and then your outbound transaction that draws from that. So that's fairly limited in how scalable that is. So leave it at that. So we're mainly thinking of the case where people try to get back to the network to settle their inbound money as soon as possible and then respend it after they've confirmed it on the back end.
Okay, so the chaining logic, which is A sends money to B and then B sends money to C, all offline, assuming that A is a hack, is a forgery. How do you settle that when it all goes up?
Yeah, so whoever was the last guy, they get left holding the bag in effect. So same with counterfeit money in the real world. I could take my counterfeit bills and buy something, get the value. The next guy could spend it, get the value. Finally, somebody's going to try to spend it, and the recipient's going to say, no, that's counterfeit. And they get stuck with that. So, I mean, that's how it's handled technically. Now, that's not a great solution if it happened a lot, and that's why we very much aim at not chaining these transactions. And we think in reality, there's really two main spending patterns. Either I get a big payday of sorts, and then I spend out of it, make many small payments out of that one confirmed payment, or I'm a merchant that collects many small payments and then goes and resolves all those and spends that at the bank. So the ability to respend money you've received offline, the system is somewhat limited in its ability to do that.
We recommend against that in the sense that, but again, if it's desired, we can support it. And one of the key things to realize is we expect that these types of counterfeit attacks are going to be extremely rare. We don't, the defenses are quite multi-tiered in terms of, being able to protect against these. So it should be really a extremely rare event if this happens, and then the risk that can be covered by the payment service provider in the event that happens for and blocks everyone else from being able to be taken advantage that way. These kind of attacks. And then Tim, I didn't want to interrupt you, but I just we're out of time. The one last sentence I wanted to say is that we would really welcome collaboration with the ILP community. I know we're aligned in terms of what we want to enable, what you guys are trying to enable in emerging markets, and we welcome other use cases with the system. We're happy to share our capabilities and make it available to you. So we welcome the opportunity to collaborate in any way that makes sense with your community.
Yeah, and just to follow on that, I mean, we are looking at the open payments protocols, the Rafiki nodes, the ILP technical details as well, just to sort of dig into this more. We definitely are trying to understand where we can align.
Yeah, let me just chime in one more point just on I was reading the rest of your chat question that, yeah, the transactions settle one by one, but both parties submit them. So both the receiver and the sender submit the same transaction. Whichever one gets there first, that's when it's settled. Then the second one, has no effect. And so the receivers are motivated to settle so they can respend it. So they want to get back to the network, and then the senders can't get a fresh spending authorization until they've settled all of their outstanding spendings. So the card has a list of everything it's spent, and when it tries to sync, the ledger will detect if they're trying to hold back, and it won't give them another fresh spending. So they have to push all of their spending to get a fresh authorization.
So only one version of the transaction is required, right? Not
Right.
both.
Right.
Okay. Makes sense. Thank you.
Maybe we should have a follow-up technical call too. Sounds like there could be
Of
more
course.
design ideas.
I was just about to say, we can also talk about scheduling a part two. So we can do that for sure. And thank you, Orain, James, and Tim for joining us today and sharing. We appreciate it, and we look forward to continued conversations as well. And again, I will share these questions with you all so we can make sure that they're answered. And if there are any links that you would like to share for any documentation or videos, that would be great to add as well.
Sure.
And thank you everyone for joining. And any last words here? Okay. All
Thank
right.
you, everyone. It was great meeting you all. Thank you, Tiffany, and Pedro, everyone else.
Thank
Thanks.
you.
We'll send you a follow-up email with the links and this deck as well. It was slightly different than the one I shared earlier. So very good.
Wonderful.
Bye.
Take care.
Thanks,
Bye-bye.
guys.
Bye.
Well done.